Good morning, everyone. Welcome to Disaster Matters, Property Insurance in the Wine Industry. With the ongoing challenges, the wildfires here to stay, we've shaped a compelling discussion about the implications of wineries, insurance, finance, and government. We'll explore how each party is working on the short and long-term solutions. My name is Alexis Sinclair. I'll be serving as our moderator today. As an attorney here at Farella, Braun & Martel, I represent financial institutions in connection with their loan facilities to borrowers, which for the past few years has included lenders' responses to the effects of fires on their borrowers' businesses. Now, I'd like to introduce each of our panelists, and I'll let them, I guess, do it themselves. So just starting in no particular order, but with Jed Taborski, who's first on my screen. I'll let you take it from here. Jed?
Okay, thanks, Alexis. Good morning, everybody. Jed Taborski. I'm the head of the wine division for Silicon Valley Bank. I've been with SVB for over 18 years now. Time flies, and all of that in the wine division. And just for a little background on SVB, so the wine division, that is, focusing on core geographies: Napa, Sonoma, Central Coast of California, and then Oregon and Washington. That's where our wine business is primarily focused on. And we got 30 professionals servicing those different regions here. So I'm looking forward to contributing today and hearing questions and moving forward. So I'll pass it back to you, Alexis.
Great, thanks, Jed. Next up, I have Jennifer Heliotti. Jennifer?
Good morning, everybody. Looking forward to being a part of this panel. I am with InterWest Insurance Services. We are a full brokerage. I am a part of the North Bay Wine team. We have a number of team members here responsible to service the wineries that we handle up and down the valley, or up and down the coast, and also in the valley. We have been working together for close to 17 years. We have been with InterWest since 2016. I appreciate the invite, and I think this conversation is important because education is key in our marketplace. And I look forward to hearing what everyone has to say and answering the questions. Thank you.
Thanks, Jennifer. Next up, I have Marc Levine. Marc?
Yeah, thank you very much, Alexis, and thank you to Farella, Braun & Martel for hosting this panel. I'm Marc Levine. I've been representing Marin and Sonoma in the state assembly since 2012. I'm a candidate for insurance commissioner next year. I was in Yountville last week. I'm generally, whenever I'm in Napa, people ask me if I represent Napa as well, and I usually respond, I can't represent all the good stuff, but I represent lots of good stuff. I've been paying attention. Of course, wildfires have affected California for a very long time, but particularly since the North Bay fires in 2017, when Sonoma and Napa and other places were so terribly affected really across the state. I authored 3 insurance reform laws that year in partnership with Insurance Commissioner Dave Jones. And just this past year, I asked my constituents, pardon me, to share their stories about their problems with insurance. And I received, over just the course of a weekend, 50 different responses about non-renewals and increases in insurance. And I've authored AB 1522, which we'll talk about later today, not too later today, later this morning, about my proposal for catastrophic wildfire insurance in California. Thank you.
Great, thanks, Marc. And last but not least, we have Michelle Novi, and I'll let you take from here, Michelle.
Thank you so much. My name is Michelle Novi, and I am the Director of Industry Relations for the Napa Valley Vintners. I've been with the NVV for 9 years, and it's been an honor to work to fulfill the mission of the NVV, which is to promote, protect, and enhance the Napa Valley. Following the 2020 glass fire in LNU complex, it became very clear that fire prevention and mitigation needed to become our #1 priority. And since 2020, I've moved kind of out of disaster response mode and more into preparation and trying to enact changes within the insurance landscape that will allow our members to have coverage and ensure that our members are aware of the different mitigation measures and risk management techniques that they can employ to reduce their risk.
Great. Thanks, Michelle. So in our preparations, the through line that appeared to me were all the participants in the wine industry want to know that someone's working on a longer term solution. However, in the immediate future, the approach is more likely to focus on what individuals can do themselves to better prepare for the next catastrophic event and mitigate risk as much as feasibly possible. With that said, I've tried to structure our discussion in these two parts, the shorter term picture and the longer term picture. So I'll start off with you, Michelle. Can you describe some of the general issues confronting wineries as they just finished the season with minimal effects from wildfires and smoke, and what wineries can anticipate in the coming season?
Sure. I think the first thing to say is that we are incredibly grateful that 2021 was not 2020, and that we did not have any significant fire events. As I think everyone knows, fire season has morphed into something that's a little bit more year-round now, and so we had an incredible harvest. All the reports on the wine quality have been fantastic. One winemaker I spoke with said the joy is back. And so I think there's a big sense of relief right now. That being said, there's still a sense of trepidation about what lies ahead. And I think everyone is using this time, especially with the rains we just had, to really look at their landscapes and make sure that they're in the best position they possibly can be in advance of fire season returning. So that looks like managing their property to reduce fuel loads, brush. It means, changing the parts on the winery, whether it's changing vents or just clearing out their gutters. It's doing everything that they can to really prepare themselves as much as possible.
Great, thanks. And I think, similar in following that same theme, Jed and Jennifer, maybe you can speak to, what are wineries doing to evaluate the current mitigation terms measures for their properties, and how do they address the foreseeable issues based on their past experience, both from the bank perspective and the insurance perspective?
Yeah, so short answer, Alexis, would be a lot. and I'll focus on from the lender side and what we've heard from our customer base. And, I think Michelle hit the nail on the head. And most of the wineries that we're talking with and growers that we're talking with are focused on reduction of fuel load. And so it's creating that defensible space. It's a separate topic when it comes to vineyards, as they generally serve as a natural fire break. But when it comes to structures, yeah, absolutely, it's eliminating some of the fuel and even trees, like trimming up the trees to a certain level to reduce that fuel load on the floor. It's vents. It's looking at roof type. It's looking at, if you're going to construct a new property, you probably are going to use different materials than you did 3, 4, 5 years ago. You're not going to construct right at the bottom of a ravine or tucked up against it. All these things are changing like real time, and people are observing and learning from what behavior we've seen over the last 3 to 5 years. I would also say that there's more of a focus on creating say maybe putting in a reservoir that has some element of a irrigation / sprinkler system attached to it, and what can folks do creatively to have a water source, which drought's a separate issue here, but in general, a water source available for firefighters to have access to if there is some sort of a catastrophic event occurring here. Private contractors. That's another topic that we've heard about. Neighbors banding together to, create a better protective environment. And we'll probably talk about this later, but it's important. You can do everything you can to protect your property, but if your neighbor doesn't, take similar behavior, you're still kind of at risk, and it's hard to get everybody to function together on that front. And then lastly, I would say on the inventory piece, and we've seen people try to get more diversified in terms of where do they store inventory to help not only protect the asset, but contain the cost. and then also look at what coverage levels are appropriate. Whereas it may have been average retail before, do they go to FOB? Do they go to cost? We'll talk later about those are choices to be made, and they all have implications. But we've seen all of that occur. Sorry, Jennifer, I took all the oxygen out of the room with that answer, but I'll turn it over to you.
Yeah, Jennifer, from your perspective, I think tagging along to Jed, what do you think?
Yeah, honestly, everything he said is happening. We are seeing wineries bring out risk engineers to do a full survey on their land, letting them know, okay, you need to have 20 feet of defensible space. You need to cut these branches back, get rid of the overhang low branches, clean your gutters, repair your roof or replace your roof. If it's 15 years, 20 years or older, use different material, like Jed said. And another key factor is the separation of the risk. Spread your risk. Move your inventory from your winery. If you are up on the mountain, if you are against a hill, move it down to the valley floor into a warehouse that has the full-blown sprinkler, system to protect your inventory. So everything that Jed said is correct, and a number of wineries are doing it to protect their investment.
Great. Yeah, and I think similar. There some of the undertones. What we're talking about is just the cost of doing some of these things. And I don't know, Michelle, maybe you and Jed can both speak to that. Like Michelle from the winery perspective, how they're looking at financing it, and Jed from the lender perspective, how you can help assist doing that.
I think the business reality for wineries has changed dramatically over the last few years. We're in a regulatory environment that is increasingly costly. And then now with the lack of either, just availability of insurance, but then also affordability, premiums have gone up dramatically. And then you add on the cost associated with all of the mitigation measures. How they're financing it, they're working with their lenders, they're drawing on reserves, but they're doing everything that they can to protect themselves. And I think as Jed mentioned, and they're asking their neighbors to kind of do the same. Everyone, at least in the Napa Valley, is working really cooperatively, and that's been kind of the silver lining of all of this. At the MVV, we have a 60 vintner strong fire prevention and mitigation committee, and in those monthly meetings, we're talking about all of the different financing options available for either state and federal grants, trying to work with our local resource conservation district to get the information and resources to the property owners. But there is a big need for additional assistance in financing these things. Clearing trees has become one of the most expensive things people need to do, especially if they have burned trees. So it's a long-winded answer, but it is a very costly situation, and more resources are definitely needed.
Yeah, and I agree with everything Michelle said, and would just add on that so far what we've seen is folks are drawing on reserves. It's been an interesting couple of years here, and in some cases, the liquidity at the winery level is pretty good right now. Government stimulus and other things, and it's created a little cushion to absorb some of these costs. But that said, that's not a solution, and so definitely talk with your lenders, right, about, okay, what can we do long term here? What can we do to better protect the property? What capital can we outlay to protect against the catastrophic event? Kind of plan for the worst and hope for the best. And so definitely talk with your lenders. And then I would say that it really goes to what is the longer term solution? And because even financing, your premiums every year, lender, I can't speak for all lenders, but certainly, yeah, we're all in this together. And so we want to talk about helping on that front, but can you do that every year? Does that make sense to have to finance your premiums every year? And that's a tough situation. So there's got to be a better long-term solution that makes it more economical in the long run.
Yeah, great. And Mark, I think, can you speak a little to how the state government is looking at helping individuals finance costs like this?
Yeah, so right now there are some funds that we're trying to create to help remove brush. There are grants for that that communities are applying for. I want to touch a little bit on the very practical steps that Jed and Jennifer and Michelle have talked about to protect our assets and our properties, that these are all science-based. If you do remove those branches from those trees next to your property, that is a measurable way of protecting against fire. But firefighters have also identified things that we often overlook. For example, something as simple as the garbage cans being too close to your building. In Coffee Park, many of those homes, which are not in the wildland urban interface, did catch fire for a number of reasons, embers blown onto roofs, but also because the garbage cans lit on fire and it was extraordinarily hot, 1,000+ degrees. And so those structures caught fire for that. But although it is all science-based to limit fire by taking these steps, there is no incentive from a financial perspective for taking these precautions in advance of the fire, other than it's smart. So I do encourage it. And so in the legislation, and I'll talk about it later, 1522, we want to incentivize people for taking these steps to help them finance this. Not only does it protect them, but it protects the businesses and communities around them. And so that is another reason to plug into the FireWise communities. It's a little bit more residential focused, but it does talk about the commercial impacts as well, because we're all part of this organism together that talks about these very practical steps that we can take to keep our communities safe and make them safer. And you can find, do an internet search on FireWise USA, and you can find all of those tools. But we need to put into practice at the state level, not only incentives and grants to help protect our communities, but also the carrot of a discount. So if you're reducing fire risk in your community, that science-based insurance rates should reflect that, so that you bring down your overall costs on what ultimately helps you with financing and everything else. So there's a lot out there for that.
Great. Yeah, you mentioned FireWise. Can you go into a little more detail about exactly what FireWise is?
Yeah, so FireWise is this national movement, nfpa.org, but just Google FireWise USA and you can find out those resources. And these are the things that people should be doing for their individual property. But when you enlist your neighborhood into this, it then leverages that protection so much more. And so, I'm grateful that my community in Marin that I live in is a FireWise community. And I know that simply because there are signs in it that say that, or that my neighbor has talked to me about, putting the OK sign on my window, but also just the education level, that it's not just that I'm alone removing the French broom from my property, that others are educated about it as well. And then Marin has been a model for other counties that are looking at the Marin Wildfire Protection Authority. So they're leveraging the fact that we have taxed ourselves per parcel, and we have created a fund, about $20 million a year, that they're then leveraging to go out and get more grants for brush removal and fuel reduction across the watershed, the Mount Tamalpais watershed. And Sonoma is looking at doing this carefully. Other counties are doing the East Bay as well, with the hills there. And so this is a model that we're also trying to incorporate. How do we bring in the home consultations or the business consultations that you're talking about, so that people have that higher degree of education about what they can be doing? Many of us think that we've done what we're supposed to do, but we've missed some obvious things. So those consultations are extraordinarily helpful. And if they can be part of a system, and again, my AB 1522 incorporates that to then incentivize that behavior, the state will be a lot safer.
Great, thanks. Yeah, I think, Jennifer, is the insurance company, or I guess industry, are they looking at some of these current efforts of what Mark was talking about, FireWise and communities starting to come together and addressing that in the present term?
Right. Excuse me. Right now, really, the insurance companies are typing in an address and saying yes or no based on the scoring system that they have, which is their intellectual property. But we don't have that ability where we can say, hey, this is a fire awareness community, this is what they're doing. And it might be due to their reinsurance treaties where they just can't write a certain fire score because they won't have they'll break their reinsurance treaty. So it's all about education with the carrier. And when you speak to them, you let them know, this is what I have, this is the winery. This is the protections that they have. This is the protections that they are planning to do. Come out, take a look, do a loss control, and see if it can fit into your program. And you just need to start early and have a lot of communication with the insurance carrier if the winery does get a non-renewal notice.
Yeah. So are you saying then that your broker or your insurance agent, can really be the person to go to bat for you with the insurance carriers then?
Yeah, we have to be. We honestly have to be, and we need to really educate the carriers because not every winery is the same. Not just because a certain address comes up as a high score, high wildfire. We need to educate them that they're not. I'm in Petaluma, and we are in an industrial area. I have a Custom Crush facility here who is non-renewed this year because it's considered a wildfire zone and they're up against the freeway. That's, it's just ridiculous. So it's my job, your broker's job, to educate them that this is just not true. So fortunately, we're able to get that non-renewal notice reversed.
Okay.
Because they're just plugging in the address and it gives that and it spits out a score.
Yeah. And I think when you are going to bat for that, is there more of a success rate with the insurance carriers, or is there, if you could score it, is there a higher likelihood than not by going on an individual by individual basis
with the larger ones?
Renewal?
Yeah, with the larger carriers like Travelers or some of the really strong financial backing ones where they don't have the reinsurance treaties that are so tight, they can actually buy reinsurance to protect your property. We are more successful. With the smaller carriers, we won't have that ability because it's strictly tied to their reinsurance contracts.
Got it. Mark, one thing that we came up in our discussion in preparation for this was the California Fair Plan, and with people being dropped from their insurance coverage, can you talk a little bit more about what the California Fair Plan is currently and what those options may be?
Yeah, thank you, Alexis. And also thank you to Jennifer. Brokers like Jennifer are really saviors for so many people struggling to find insurance. They're the ones who are the advocates for their clients. It is really, a hair-pulling endeavor, not just for the people that are looking for insurance, but the brokers who are really, doing all of that work to track down who's going to cover them. And it's often one insurance carrier won't, but another one will because of risk exposure or whatever their proprietary scoring mechanism is. And we need to bring some transparency to that scoring mechanism so everyone's on a level playing field. If they're making changes to their property, if they're protecting their property, they have to understand how that will affect their score or even what their score is. When we take an Uber, we know what our score is. So how come we can't have that when we're buying property insurance? So there's a lot of work to be done to increase transparency and help people there. The Fair Plan has traditionally excluded farms from its insurance. So the Fair Plan is what's often called, I think they call it themselves, the insurance policy of last resort. And it is an insurance policy that is supposed to be temporary. Both of those things are in their marketing materials on their website. And yet it seems to be the fallback of what people ending up with or are desperate to get. Often when brokers get a client onto the Fair Plan, their work doesn't end. They're then looking for another carrier because week to week, coverage options will change and they can get better insurance for their clients. But the Fair Plan itself is very limited in what it covers. So it might cover fire or lightning, but it doesn't cover liability. So we did pass legislation this year, which was the best or the worst of the only option that we had. It's as though you're stuck in a room that's on fire and there's a doorway to another room that's also on fire. That was essentially what SB 11 was, to expand the FAIR Plan to farms, but the rulemaking process for this has not begun for one reason or the other. The insurance commissioner hasn't done it. And we don't know if this will also be held up in court because of the anti-competitive nature of providing more insurance options while there are other carriers that we're trying to entice into the California marketplace. That's generally the FAIR Plan. If I kind of wrap that up in a bow, you would go to the FAIR Plan's website. It's easy to find. And you essentially put in your zip code, press a button asking for a broker to contact you. You put in your contact info, and then they can give you information on the FAIR Plan. Or if you know a broker, you can ask them to help you find the worst of whatever options are, or the best of whatever bad options you have before you.
Great, thanks. Michelle, are people taking advantage of this, or do you know, like within your constituency, how are people addressing being dropped and trying to find options for insurance?
Yeah, the California FAIR Plan has been a tricky subject because they were writing winery policies. And then I think that my hypothesis, based on some conversations with them, is that they looked at how many policies they had written in the winery space and reinterpreted wineries to be included in the farm exclusions. And so then SB 11 became really necessary because people who had previously been covered were dropped. They had their policies canceled. And now, thankfully, with the passage of SB 11, because the winery policies were being written before, they're now actually being written again ahead of the other rulemaking that Marc mentioned. So yes, our vintners are utilizing the FAIR Plan where they can. The coverage, the amount of coverage is being proposed to be raised, which would be a positive step. But, at this point, people are just trying to cobble together as much coverage as they can. And so the FAIR Plan is not a solution, but it is oftentimes, and especially for smaller operations, a piece of the insurance coverage puzzle for them.
Great.
Yeah, I would just add to that we've seen it a fair amount where a lot of these properties will have 10, 20, 30 acres of vineyard and a house over here and a house over here and then a winery over here. And to Michelle's point, you start to build like an insurance package overall, and that's where a FAIR Plan is fitting in right now relative to those dwellings and getting those insured. And that has tangential benefits in terms of coverage levels on the operation and those assets. And Jennifer could probably speak more to that than I could, but we have seen that fairly prevalent in our space.
Yeah. Okay. Great. Thanks. One of the other topics that we touched on, and I think you were alluding to initially when we were talking about how people can start to evaluate their businesses and what they're going to do in the immediate future, is looking at each one of their assets. One of the assets we didn't touch on yet, but was just the crops. And one of the side effects of fires, especially in the last year, was smoke. Jed, can you talk about, just within your own customer base, how many people, I guess, let me start back. What is crop insurance? How many people carry crop insurance, and what benefits can it provide for the immediate term that you see?
Sure. So crop insurance is designed to protect the fruit, and ultimately, when I say protect the fruit, I mean it's basically ensuring the value of it. And so it's not designed to replace the vines or anything like that in some sort of a wildfire event. But if there's smoke damage, if there's even drought implications, if there's disease and other factors, growing perils, that's what it's intended to cover. And what we learned, I think, as an industry in 2020 and perhaps in 2017 was, the smoke taint becomes, a challenge. And it's not only a challenge for the industry in terms of perception, but then it's an economic issue too. And so we have seen the volume of folks who are participating in crop insurance increase over the last, say, 3 to 5 years. I think it's still underutilized to a certain degree. And certainly Michelle, Jennifer, it'd be great to hear Mark from everybody. But when you look at it, it's not real expensive for the coverage. You have to go through a process. It's not terrible, but I think it's like $500 or $600 per varietal for the base level coverage. I'm not an expert in crop insurance, so definitely take my numbers with a grain of salt. But there are protections that come with it that have overtones relative to fire, smoke, and drought as well. And so it's good that there's increased utilization, but there's probably more to be had. And it's also regionally based too. Some regions are, doing a really nice job with getting it. And other regions, have felt like, well, we really haven't had that many fires over, say, a 5-10 year period. We don't need to worry about it. But everybody's starting to move that direction a little bit more aggressively. Michelle, anything you would add to that?
Yeah, we saw in 2020, at least in Napa County, that crop insurance was around 60%. So 60% of the growers had it. I would expect that it's probably going to be higher for 2021 because it does exactly relate to drought impacts, but also smoke impacts. And having that extra layer, putting together an insurance and risk kind of management model for yourself, that's going to be an important component. I also want to acknowledge Congressman Mike Thompson and his work to get the wildfire and hurricane indemnity program passed again to cover 2020. That's going to come online hopefully here in the new year, and that will help supplement any of the payments that people received related to their crop damage, and it will also help them with drought and smoke impacts. So that's a positive. Again, it's not a situation you want to be in, but at this point, if you don't have crop insurance, I would strongly recommend that you look into getting it.
Yeah, and Jennifer, is that something you can talk to your broker about, or do you have thoughts on crop insurance?
Yes. So crop insurance, I just want to say, is extremely important because there is a gap between your crop on the vine and harvested grapes when it comes to commercial insurance. Crop on the vine is covered by crop insurance. It is not covered by your commercial insurance. Once it is harvested, then that's where we have coverage. And if you have a stock throughput, most markets actually have smoke taint exclusions on your harvested grapes, where if you had crop insurance, you wouldn't have that exclusion. That's what it's made for, especially before the recent rains. Drought was a huge discussion topic, and that's what crop is made for as well. You can speak to your broker. We have a dedicated crop unit at InterWest who do it all the time. I know that banks also provide it as well, but your banking partnership or your brokerage can absolutely help you with crop insurance.
Great. Yeah, thanks. So I think moving into the longer term picture, Mark, you've been hinting at AB 1522. Can you talk more about that, what its goals are, and how it's going to help wineries, banks, insurance companies, and all the parties involved here?
Yeah. Thanks, Alexis. It's not just something that's happening, say, in the North Bay. I was in Paradise yesterday up in Butte County, where the Camp Fire wiped out that town, where they're struggling as they're rebuilding, also finding the financing and insurance mechanisms to help them reconstitute their entire city gratefully, I met the mayor and he got his house completed, but many of them are still waiting on the PG&E settlement to come forward. But what we've recognized is that the insurance industry is retreating from whole zip codes and whole portions of the state, not just in residential, but in commercial and agriculture. The insurance marketplace in California isn't working very well for a variety of reasons. One of them that Jennifer touched upon is reinsurance. So let me kind of take a step back and talk about what we're trying to do with 1522, which is create essentially a new insurance product, catastrophic wildfire insurance for moderate and high risk places in California, hopefully taking pressure, the upward pressure on rates off of the more urban and suburban areas where they've also seen non-renewals and skyrocketing rates, but creating another class of insurance so that we can actually insure more of California and have it backed up by a reinsurance fund, financed by tax-exempt bonds, assessments, and others similar to the Earthquake Authority or really Florida's hurricane related agency, to make sure that we have a healthy marketplace to insure those parts of California. People say, well, why would we incentivize rebuilding in a place burned by fire? But no one's saying, well, why are we allowing people to live in Truckee? So we expect, a ski town to always exist, but paradise shouldn't exist. You can live in so many seaside communities that are going to be susceptible to sea level rise, but somehow this is not appropriate. We can build our homes on faults, and that's okay, but somehow it's this wildfire danger that's the problem. And so we can't just point at one disaster and not look at the others. We need to make sure that California is healthy for the entire state. It's an entire state issue. So backing this up by a reinsurance fund brings health into the marketplace in California. It allows, but by having more carriers, the risk is then distributed. So the reinsurance fund is activated when one carrier experiences over $100 million in losses. So it is a high threshold if we have multiple carriers in any one event to get to that reinsurance fund, but it backs them up. Right now, reinsurance is getting more and more expensive. We're seeing the California Earthquake Authority crushed by this right now, where they are threatening reducing benefits without reducing premiums. So we need to make sure that the reinsurance market is a good one in California. And then the last part is the incentives and discounts for doing the right thing to make sure that you can protect your community. We don't want insurance to cover our losses. We actually just want to protect our assets and not experience any loss. Hopefully finance our assets, never experience the loss at all. And so the incentives to protect our communities is extraordinarily important. And so if we're able to take some of the lessons we've learned by having business or home consultations, take that statewide to places that are high risk, and then of course, further incentivize that with grants to do the work or bring down the costs of premiums, that will make the whole state a whole lot safer.
Great. Yeah, thanks. And I think, some of the themes you touched on in there and we've talked about earlier, how communities can come together. Michelle or Jennifer, can you speak to how the insurance and winery industry as a whole might be looking at grouping together for longer term solutions and maybe incentivizing that through lower insurance premiums, group insurance, things like that?
So in regards to like pooling insurance, captives is what we've, have used in the past and so forth. Yes, there are captive talks or captives out there in place. It's just really hard right now due to our fire history since 2017, and joining wineries, have the option to join a captive. Let's say down in like San Luis Obispo, why would they join a captive when it's heavy north, Mendocino County or Napa Valley with those wineries when they're sharing their risk? So I think it needs to be, like Mark said, regional with that, because there's different exposures in different areas. And I look forward to that Senate bill, and that would be interesting to see how it plays out, because it is needed. We do need to have some sort of catastrophic coverage for wineries who are in locations that truly just are very exposed.
Yeah, I would add on that I was joined a meeting, last week with probably 50 other wineries that were looking and learning about captives and seeing if that would be an opportunity for them, whether it was in the Napa Valley or across, the state of California. Um, it does seem that our solutions are going to be very regionally based, and that makes sense because of the varying topography and kind of microclimates in different places. But one of the things that's been really kind of incredible in Napa, at least, is been how the vintner community has come together. I mentioned that committee that we have, 60 vintners strong. We have a task force looking at insurance and member resources, but we also have a task force focused on how can we better support our volunteer fire departments. We have another task force looking at funding and what can we work on at the local, state, and even federal level. And all of those groups working together, we've been able to support Napa County's Board of Supervisors in their adoption of our, community-wide, fire prevention plan, and basically supporting their decision to allocate more funding for that. I think it's really important that people tell the stories of what's happening, and that they not only just speak to one another, but they speak to their local elected officials so that they're really clear on what's happening, and that they can support any regionally based solutions.
Great. Yeah, and I think it's along those lines, as groups band together, they can obviously control with what's in, their own control, like their properties that adjoin each other. But, I think you had mentioned, Michelle, previously that there are areas around these properties that may not be within their control, that may be in state, local, federal government control. Are wineries, and how are they, interacting with, those types of agencies where there's just open space land and state or federal managed land as well?
Yeah, at least in Napa County, we have, we're really fortunate to have so many areas protected, and within like the Napa County Land Trust, for example. It's been really encouraging to see how these entities are showing up and at the table to talk about how they're managing their lands and kind of the responsibilities that they have to their neighbors. There's one group that meets that's convened by the Napa County Resource Conservation District, and it meets and brings together all of the different local and state agencies, and also the private land owners, to talk about the different programs that they're doing, the grants that are available, how they can work together. So no one's siloed in what they're doing, and I think that that's another kind of theme is communication and talking to one another, and realizing that a fire doesn't stop at a made up jurisdictional boundary line, and so that we all have to be working together, whether it's Napa and Sonoma, Sonoma and Marin. We're all very interconnected, and we have to work together in order to prevent these large fires from really taking hold and being as disastrous as they've been.
Great. Yeah, Mark, do you know if there are state agencies that are managing that are focused on this issue, or how they're addressing that?
Yeah, we've funneled hundreds of millions of dollars into reducing fire risk throughout the state. Of course, through the last drought, and because of some other drought-related issues like the bark beetle infestation, over 100 million trees have died in California, which poses a number of different risks to the environment, including wildfire. But we've seen also a shift where there's an emphasis, particularly in North Bay communities, on preserving land forever or returning it to nature. But a recognition that we need to change and pivot a little bit to fuel reduction as we do it. So we can't just protect the land. We actually have to engage in that fuel reduction. And so these state monies, also coupled with, in some regions that tax themselves to preserve land, using some of that money for that fuel reduction and leveraging it into more grants to engage in those practices.
Okay, great. Jed, in the banking industry, you require borrowers to insure their property, and that's part of the contract that they have between borrowers and lenders. With borrowers being dropped, you had mentioned that they're starting to ask, do they need insurance? The only reason they may get insurance is because you're requiring them to do that. Can you speak a little to that and maybe what the banking industry, or specifically Silicon Valley Bank, might be doing to address that for the immediate and longer term future?
Yeah, so I'll break it into two parts. I'll talk a little bit about what we've heard about the broader banking environment on this front, and then I'll talk about what our experience has been and what we're doing relative to the broader financing market, lending market. I think the general theme has been one of working with customers through this challenging situation and kind of having a baseline of, look, the amount of the loan needs to be insured. That's like the baseline. But beyond that, it's open to discussion. And that's not that dissimilar from what we've experienced here. And, I've been doing this almost 20 years, and I thought I knew a fair amount about insurance until the last 9 to 12 months. and what we've learned is that it's bespoke. Every single situation for every borrower is different. You cannot apply a universal rule of thumb across the board. And so we've been all over the spectrum from, having folks that have just enough to cover the loan to, something bigger. And really what we try to do is have a conversation and let's, change it from only getting insurance because you're making me. Well, no, let's take a step back, right? The insurance is intended to protect your assets, right? This is your equity, your legacy, your livelihood, and that's the intention of it. It's not to take care of a bank. It's protecting those assets. And so that's where we start, and then have a conversation about, okay, well, with that premise, what are you comfortable with, owner operator, in terms of insurance? What's your risk appetite on that front? And then how does that compare with ours? And ultimately where we see this going is when you start to get into, properties with multiple structures and vineyard, like vineyard, you really can't get insurance on vineyard right now. Jennifer can speak to this more than I can, but our experience is it's off limits. So, okay, maybe you don't insure that. And then, hey, there's a residence up on a hill here. We don't use it. It's not important for our operations. It's not generating, a significant amount of value. So it doesn't affect some of those asset-based metrics that lenders would use. Maybe you don't insure that too. And so you literally are going, kind of down the list in terms of assets and what needs to be covered for livelihood and legacy and estate or equity, and then what can you carve out because it just doesn't move the needle enough and it's cost prohibitive in some cases. So it's a process. Everybody learns a lot, but you could try to find a solution that's amenable for everybody. And I suspect that other lenders are doing the same. Okay,
great, thanks. Jennifer, I guess, do you have any tag along thoughts to what Jed was mentioning in terms of lenders requiring it and what you see from the insurance side of that?
Yes. So when we have a discussion, if we have, let's say, a non-renewal notice that was issued to the winery, and they were carrying so many limits at their current term, and because of their location, they can only get said limit, a lower reduction of limit. We need to have a conversation and say, what exactly are your banking covenants? What do you need to meet? Will they accept a higher deductible? How can we get this insurance affordable and placed? because number one, we don't want forced placed coverage from the bank because that doesn't protect you, it only protects the bank. So we just need to have a very open communication between us and your banker, if there is a banker involved, and see what their risk assessment is and what is needed to protect the asset that they have in you, and what risk you want to take on as a client, whether it be a higher deductible or lower coverage.
Great. Yeah. Thank you. And go ahead.
Just one quick thing, and I'm sure Jennifer would underscore this, but the discussion timeline needs to happen earlier in the process. This is something we'll talk about later, but it takes a long time now to not only work through between the lender and the broker and the owner of the property, but then you go to reinsurance market and all that stuff. It takes a long time. So recommendation is to not wait, until there's 60 days or 30 days out from renewal. It's like probably a 6-month process, I would guess.
Yeah, I was going to say, so what is that timeline looking like? And, how far in advance should you be doing this? Is that an annual thing?
Yeah, well, yeah. So the insurance companies, they have a legal requirement to issue 60-day notice of non-renewal if they're going to non-renew you. But honestly, if we are in a very high exposure, or if we know the trends of the insurance company, it's our job to have a conversation with them 4 to 6 months out, depending on the size of the account. 6 months if you are a large vintner, winery. That way we can get ahead of it. We need to be proactive, not reactive. That is what we focus on here. Is we need to be proactive to be able to solve any problem that gets thrown at us in the renewal, because so many different things pop up, and we just need to be able to cover all the bases. Yeah.
I think one point that, similar along these lines, Jed, you had mentioned in our prep session, is don't suffer in silence. Can you just briefly touch on what you mean by that?
Sure. So I'll break it into 2 buckets of what it means and what it doesn't mean. And what it means is something that Jennifer, I think all of us have expressed this at some point during this session, and it's communication, right? And so it's along the same lines of trying to get ahead of upcoming renewals. And so, to the extent you have concerns about, policy, coverage, cost, talk to your lender. It's okay. It's okay to bring these topics up and try to get ahead of it to come out with a solution that works for everybody. It's a discussion, but don't wait, because then, if you wait, then you're kind of backed up against the wall. The lender's backed up against the wall. Any constituent that's associated could be backed up against the wall. So, talk to your lender, talk to your broker, like Jennifer has been saying here, and think through, like, what have you done at the property level for the last 24 months, maybe 36 months? Like, what have you done in terms of mitigation tactics, and what do you plan to do in the future? And share all of that. And the way we look at it is, this is obviously good data points for the insurers. And what you hope is that by taking action now, you're going to better position yourselves when it comes up for renewal time. That's kind of the way we look at this. And so definitely talk with all of your constituents on that front. What it doesn't mean is that even through those discussions that a lender, a broker are going to be able to solve all of the issues, right? And that's just not where I think this market is right now, but it's raising awareness. It's getting in the right audiences to raise this awareness, like Marc here, where, and Michelle as well, where we're saying, look, there's some pain that's occurring right here, and we need to find a sustainable long-term solution. The more discussion that is had on that front, the more likely something of that nature is going to occur. So there's no one size fits all. Like I said, there's no easy solution, even if you do have all this communication, but it's a start. It's the right direction to take. We can't wait, because the legislative process and other things, it takes time. And so prepare now in advance of the future.
Great. Well, I think what I want to then last move to is, for each of you, what are 1 or 2 things that you would like people to take away from here? And I'll start with Michelle, since, let's go reverse order of how we introduced ourselves.
Sure. This is tied to not suffering in silence, but it's a little bit broader. It's tell your story. One of the most powerful tools that I have when I am sitting in a room with a local elected official or state official, or even speaking with the insurance commissioner, is the stories are the stories that have been told to me by my members. Their accounts of how the fire moved across the landscape, their accounts of what they did to prepare, what they wish they could have done. All those aspects are really important and powerful for your representatives at your trade association to hear, but also the local elected officials and CAL FIRE representatives. So that's my takeaway is, yes, don't suffer in silence. Tell the story to as many people as you can, because it's going to empower those people to better fight on your behalf.
Great, thanks. Mark?
Yeah, it's so true, Michelle. I look at things from a regulatory perspective, but empowered by those individual stories. And since 2017, essentially, when people really woke up to the threat of wildfire, we've been tinkering at the edges, but not fixing the regulatory mechanism in California. But we know in other states, whether it's hurricanes, tornadoes, and floods, they encounter disasters annually. And we can sustain whatever these disasters are, but also have a healthy marketplace. The problem in the legislature is that usually the status quo wins the day. And the status quo is essentially what the insurance industry wants in the insurance committees. And so I really would call upon you to ask for more significant change. I think that's how AB 1522 will come about, is when my colleagues hear and demand that it's something that they need to have. Because if we're able to strengthen and make the marketplace in California more healthy, then we'll have more choices. We'll also be able to bring down costs. And as it stands right now, the insurance industry is making money. So they're not incentivized to change anything. They're just changing their own behavior about how they make money. And that's a scary thing, because they're not looking out for consumers or for you. They're looking out for their bottom line. That's okay. We all run businesses, but there's a way to encourage greater market participation, which is what I'm hoping through AB 1522.
Great. Thanks, Mark. Jennifer?
Well, I'm going to say it again. Communication is key. That is I think on my side is the major takeaway, and education. And as your broker's responsibility to educate you on what is happening in the marketplace. Insurance is expensive, and you need to be prepared for that. So there are no surprises. And I think also what is key is to reduce your fuel load at your facilities and in your buildings, and maintain your property so that when it comes to renewal and inspections, you perform well and you can get the best coverage possible.
Great. Thanks, Jennifer. Jed?
Yeah, and just picking up where Jennifer left off, it's taking action, and that's communication, that's reduction of fuel load, that's changes to structures, like keep very good records on those things. And then when it does come up for renewal time, you're able to share, like, okay, here's the work you did, here's what it costs, and presumably someone would want to see that. And it's an easier story for you to tell to any broker and ultimately any insurance carrier. So I guess the number one message for me would be to take action and don't wait. And then there's certainly economic considerations in that statement of take action, because it costs money, and talk to your lenders, talk to your partners, and see what is feasible to execute on. The second takeaway I would leave you with, and this is a challenge given how expensive insurance has gotten, but I don't view insurance as a tax, even though it kind of feels that way. And just to fill you all in, I grew up about an hour from Paradise, which is also about an hour from Greenville, California, and both were completely wiped out by wildfire in the last 3 years. And I've never thought that would happen. And so it kind of hit close to home for me. And so I just look at it and think, definitely you got to do what you can to protect, your assets. And by protecting it, hopefully you never need insurance. But in the event you do, it's a game changer, a lifesaver when it does occur. We've had some customers who considered not renewing a policy, and then a glass fire occurred and there was damage, and you never know, and so I realize it's expensive, and it's now moving into part of your budgeting process. How do I afford to pay for insurance? And again, talk to your lender, but it's there when you need it, and just keep that in mind.
Great. Well, thank you all. This concludes our program